Namaste. Good morning. The session, as I told you, we are completing all the practical aspects of it. The next two classes will be more of theoretical aspect of it. Today, we will complete non-resident taxation in some time and move on to DTAA. Okay? Huh? Sunday oda? அப்படியா? Okay. Right. Presumptive computation applicable for non-resident. Presumptive computation applicable for non-residents, my dear friends. Okay, what is this presumptive computation? Okay, we already know something of presumptive computation 44 AD, 44 ADA, and 44 AE. 8%, 6%, 50% for professionals, and this vehicle operators, transport operators, 7,500 per month or any finance minister no? Okay, or heavy commercial vehicle 1,000 per ton per month. Okay, like that we have studied this. This is for resident assessees. This is for resident assessees. For non-resident assessees also presumptive computations are available as a continuation in 44. Okay. For non-resident assessees also presumptive computations are available. Now what is the difference between for a resident assessee and non-resident assessee? For a resident assessee, this 2 crore, 50 lakhs, 10 vehicles for a non-resident flat. Even if your turnover is 10 crores, 15 crores, declare this percentage. For resident assessee, there is an option. If you are not declaring this, maintain books and get them. For non-resident assessee, nothing like that. Whatever. Okay, right? That is the big difference. Presumptive computation of income for non-residents. It starts with section 44AB, non-resident shipping business. This is also said in section 172. Now, what is the difference between saying this in section 172 and saying this in 44B? 172 is a collection mechanism. 172 is a collection mechanism. Collection mechanism na enna, where the department fears that there will be loss of revenue. In 172, we are talking about a case where previous year and assessment year will be the same. If a non-resident ship comes to any of the Indian port, if the ship pertaining to non-resident comes to any of the Indian port, then, okay, okay, then income will be computed on a presumptive basis, 7.5% of gross receipt. 44B also. What is the difference? 172, if the ship comes occasionally, isolated. If it is a regular business, we go by 44B. 7.5% of gross receipts will be considered as income. 7.5% of gross receipts will be considered as income. Even it will be total. Demurrage charges, handling charges will also be covered. Everything put together, 7.5% total income on the paid tax. Whereas, no, you have to check, you have to download it. You will get the material. Section 172 will be applicable if ship comes occasionally to India. Non-resident airline business, 5% of gross sales. Shipping 7.5%, airline 5%. Am I clear to you? Okay, right? Okay. Antonio, can I ask you some questions? British Airways. Okay. Flight from Chennai to London. Tickets booked in India. Is it taxable in India? Yes. Tickets booked in UK. Is it taxable? The flight from Chennai to London. Still taxable. Flight from London to Chennai. Tickets booked in India. Not taxable. Ticket booked in London. Okay. Do you have a different answer? Uh, Four cases. Chennai to London. Tickets booked in Chennai, London. London to Chennai. Tickets booked in India, Chennai. Ticket booked in London. All are taxable. Nirmala Sita. Okay. Number five. Chennai to London. Income arises or accrues from India. Commencement of journey is in India, so it becomes taxable in India. It is whatever is the income. London to Chennai. London to Chennai. If it is booked in India, it is taxable because income is received in India. Only one case not taxable. If the commencement of journey, not the destination, if the commencement of journey is outside India and the tickets are also booked outside India, then it is not taxable. Otherwise, in all the cases, it is taxable. Are you clear? Income from letting out of plant and machinery and providing services. 10% of gross receipts. இதுதான் நேத்தி அந்த கொஸ்டினோட இது. நான் வந்து இதை சொல்லி கொடுக்காம அந்த கொஸ்டினை போட்டேன். நேத்தி நம்ம letting out of plant and machinery and services. Okay, this is the provision. Income is 10%. Okay. Income from civil construction contracts 10%. Am I clear to you? So there are four types of presumptive computation. Shipping 7.5%, airline 5%, letting out 10%, and civil construction 10%. Am I clear to you? Okay, what is the difference? What are all the two difference I asked you to remember? What are all the two differences between a resident presumptive taxation and non-resident presumptive taxation. No limit and mandatory. There is nothing called shall I declare a lesser income. There is no option at all. Are you clear? Yeah. Yeah. Obviously, shall we? Shall we? Okay. Now, next level understanding. Section 44D, taxation of royalty income. Okay. Section 115A அப்படி அதுல என்ன இருக்கு? 10 percentage. Okay. Both these provisions are for non-resident. Okay. Both these provisions are for non-residents, be it section 44D, be it 115A. Sir, which provision to adopt? To whom and what level it is applicable? 44D is applicable if PE is in India. PE stands for 44A, 115A is applicable if PE is not in India. That is the difference. 44D is applicable if PE is in India. 44D is 44D. Okay. If the foreign company does not have PE in India, 115A. Has a PE in India, 44DA. PE is nothing but permanent establishment or a place of India, a business in India. As a revenue law, what you should ensure. This comes in the chapter of PGBP. Okay. What you should ensure is they are not overbooking their expenditure. They are not overbooking their expenditure and showing lesser profit in India. So the law says expenses wholly and exclusively incurred for earning the income will only be allowed. Repeating, expenses wholly and exclusively incurred in India will be allowed. Do you remember long back I told you the coinage of the term wholly and exclusively? Any idea? Wholly means quantum. Exclusively means purpose. The entire quantum should be for the purpose of earning such income in India. Wholly means quantum, exclusively means purpose should be. And I will accept any reimbursement to head office. Any reimbursement to head office. What you cannot claim. Okay. According to this section, the following are not allowed. Allocation of cost, expenses other than reimbursement to head. 44 DA presumptive கிடையாது. First four தான் presumptive. Non-resident shipping, airline, civil construction, plant and machinery தான். 44 DA computation mechanism. 44 C and 44 DA computation. Okay, read through please. Read through. Shall I? Shall I? Okay. There is something again, one more mechanism by which I want to avoid head office charging over and above what they can. I have always told you they place the head office at some play at some tax friendly state. From there, they start allocating the expenditure because head office works for everyone. Okay, normally how they allocate major part to the country where the tax rates are higher. To avoid such came 44C, okay, which says head office expenditure. This is available for a branch office of a foreign company located in India. The maximum amount allowed is actual expenditure or 5% of adjusted total income. What is adjusted total income? Total income before claiming head office expenses, unabsorbed depreciation, and set off of losses. Huh? Yeah, and chapter 6. What is head office expenditure? As a footnote, I have given you. Okay, these are all considered as head office expenses. The law has given you a list of head office expenses: rent, rates, taxes, salaries, wages. Okay, limitation is 5% before allowing depreciation or any of the brought forward. A foreign company converges incorporation carries on business in India through a branch office located in India. Okay. Are they having PE? Yes. So 115A is not applicable. 44 DA is only applicable. They are having a permanent establishment. It submits the following information. Royalty received 200 lakhs. Expenditure to earn the above income. Depreciation as per Income Tax Act on the assets in India. Can I claim? Yenda? Yeah, wholly and exclusively incurred in India. The head office expenses. Royalty 44 DA. Depreciation as per income tax on assets located in head office in USA, which assets are partly used for Indian operation. No, why? Wholly and exclusively இருக்கணும். Wholly, the entire quantum and purpose. Salaries and other payments in India. Payment to Singapore office for their use of data. No. Okay. Reimbursement of actual expenses incurred by head office for the Indian branch. Yes, allowed. Reimbursements are allowed. Paid to head office for apportionment of their expenditure. Not allowed. Interest received from Indian concern on money lent in foreign currency. What rate it is taxable? 20%. No expenses. Commission, there is no special rate, less expenses. Compute the total income and the tax. Okay. Yeah, 44C is not speaking about for royalty. This provision will only apply, not 44C. For any other entity, 44C will be applicable. I'm getting 58 lakhs. Anthony, கொஞ்சம் வெளில போய் பேசுறது. For royalty, for commission, for commission, is commission taxable at a special rate? What are all the income taxable at special rate? Royalty and fees for technical services if it is coming under 115A. All type of interest, dividend. Yeah. Because we are going to tax it at 40%. Whereas interest is taxable at 20%. If it is for infrastructure, it is taxable at 5%. Who அதே நீ tax compute பண்ணப்புறம் less tax deducted access. 10% is only for 115A cases. Yeah, you can do it in this in that format. Allowed. Do you know what is the surcharge rate for foreign companies? 2% and 5%. Take your time, have a Any doubts, please ask me. Shall we? Okay. A general question to you. I entered into an agreement with a foreign non-resident that I will pay him $1 lakh, so 70 lakhs. So what happened is, after the work is over, the non-resident asked me to remit 70 lakhs. I grossed up. If 70 lakhs is 90%, what is 100%, and paid the tax. I paid him 70 lakhs. Should I give him TDS certificate? That is, he has not borne the tax. He has been paid 70 lakhs. Okay. I have borne his tax because I promised him that the contract is for 70 lakhs. So I grossed up and paid the amount. Should I? You should still. I pay the TDS. That is different. Should I provide a TDS certificate? Either invoices amount கொடுக்கிற invoice is 70 lakhs. Okay. Yeah, the answer is yes. That strong yes only is the answer. Why? I have only bond. No. His income is now, let us take 84 lakhs or 80 lakhs. His income is not 70 lakhs, though he has received 70 lakhs. Ipo, DTAA prakaram, if that country is asking our country to give, sir, can you provide what is the payment you made for this particular non-resident? We will say we paid him 84 lakhs or 80 lakhs less some TDS and paid him the net amount of 70 lakhs. Yet, while making payment to a non-resident for providing technical service on a World Bank aided project, net of tax had deducted tax at rate specified, but says that the payee is not entitled for TDS certificate since the tax was not borne by the payee. Okay, as per the agreement, examine, no, he is eligible for TDS certificate. Why? In India, but for in the country in which he is a resident. Hmm. My income is 77 lakhs. Yes. Number residence to resident contract for me. I should pay you 1 lakh. Okay. I mistakenly paid the entire 1 lakh. I'm unable to track you. So what I do is I gross up and now say that my expenditure is 1,10,000. ஆனா உன் பேனை கொடுத்துடுவேன். 26 ஏஎஸ்ல பார்த்தேன்னா உன்னோட இன்கம் 1,10,000 இருக்கும். Okay, 26 ஏஎஸ்ல your income will be reflecting. அதே மாதிரி தான் DTA will. I mean, அதே மாதிரி தான் information between the countries. Okay, they will get that. Okay. That is, I paid 1 lakh. Is that 1 lakh a gross or net? Net. But I paid him 1 lakh. Though actually I have paid the gross amount, but taking that as the net amount, I will gross it up further. The net result of the business carried on by a you want it by a branch office by a branch of a foreign company in India for the year ended was a loss of 100 lakh after charging head office expenses of 200 lakh allocated to the branch. Explain with reason the income to be declared by the branch in its return. No, to find out adjusted total income. I'm not talking about royalty here. I'm talking about head office expenditure. Are you clear? Okay. ABN Bank is incorporated in Australia and it carries on banking business. It has branch in different countries including India. During the financial year, the Indian branch of the bank paid interest of 25 lakhs and 10 lakhs to its head office in Australia and branch office in London. Explain with reason whether the interest so paid shall be taxable in India in the hands of HO and Indian bank and the London branch. Income accruing or arising from India. Question number 38. Seaport Shipping Line, a non-resident foreign company, is engaged in the business of carriage of goods shipped at Mumbai port. During the previous year, it had collected 100 lakhs, demurrage of 20 lakhs, and handling of charges of 10 lakhs. The expenses of operating the fleet was 110 lakhs. Compute the income by applying the presumptive provisions of 44B. இது சொல்லலைனாலும் we would have gone only by presumptive provisions. Income down or tax get a 40%. கத்தால பொங்கல் பண்ணி எடுத்துன்னு வரலாம்ல. Second is better. Mr. Q, a non-resident, operates an aircraft between Singapore and Chennai, received the following amounts while carrying on the business of operation of aircraft for the year. 2 crores on account of carriage of passengers from Chennai. Yeah, idla 5% compute. 1 crore on account of carriage of goods from Chennai. 3 crores on account of carriage of passengers from Singapore. No. 1 crore in Singapore on account of carriage of passengers from Chennai. Okay. The total expenditure for the purpose during the year is 6.75. Compute the income chargeable to tax in India under PGBP. What would be your answer in the case of if the business is carried on by a foreign company, Q Airlines? Still the same. Doesn't change. Only the tax rates might change. Company individual, but computation of income will not change. Huh? அப்படிலாம் இல்லை. ஆமா ஆமா. உனக்கு நீ இப்படிலாம் கேட்க மாட்டேன். Why they have asked, what will be your answer if in the case of business carried on by Q? Okay, if your answer changes, the next line ஆரம்பிச்சாங்கன்னா answer changes அர்த்தம். இது plain விட்டாங்கன்னா it is இது. First your answer will start here. In the case of non-resident, the following incomes are taxable in India: accruing or arising from India, received in India. In the case of airline business, if the commencement point He received the following, friends. Okay, he received the following. So even this is taxable in India. 3 crores in India. He received the following reverse circle. Huh? Adan 3 crores in India. திருப்புற மனசு வந்துருத்தே. பாசுரம் எவ்வளவு தெரியும்னு கேட்டாலும் எனக்கு ஏதாவது ரெலவன்ஸா புரிஞ்சுது முடியுது. Okay. This is about presumptive computation which can also be a questionable area. Okay, so now in our we now know residential status, scope of total income, special rates, presumptive exemption, and we also can see what is the TDS rates, which I always tell you is mapped with the rates of taxation for non-residents. Salaries is always average rate. PF withdrawal, winnings is 30%, non-resident sports person 20, or everything add HEC, commission 5%, infrastructure 5%, distribution of dividend by business trust, okay, 5%, okay, distribution of interest to unit holder received by a business trust 5%. Okay, everything, every infrastructure 5% except IFSC alone 4%. Okay, otherwise everywhere it will be 5%. 194N is applicable for them. Okay, mutual fund withdrawal 20%. Okay, that is dividend. Okay, interest is 10%. Okay, everywhere interest is mutual fund invested in foreign currency, and interest on bonds again 115 AC non-residents, non-resident Indians. Okay, 10%. So these rates will be mapping with our rates of taxation. அங்கேயும் பார்த்தீங்கன்னா GDR, interest on investments, dividend on investments, everything taxable at 10%. That's why. Okay. Available for non-residents also. Yeah. No, it is just purchase and sale of goods and services. That's not a technical service. Technical or professional service, if you remember Kotak Mahindra case, it should be individualized, customized. Okay. So if you look at this again, coming back, okay, 44 AD, taxation of royalty, 4115A, is one other section which tax royalty. நானே சொல்லிடணும். Developed in India, 75% of the expenses is incurred in India. இது 10% will be the computation of income. 10% will be computation, no expenses, everything. Section 115 BBF. Okay, royalty has three sections: 44 AD, 115A, and 115 BBF. 115 BBF is more for residents. Of course, non-resident also who are developing can avail that provision, but more for resident perspective. I want you to understand about IFSC, International Financial Service Center, located in Gift City, Gujarat. அந்த சிட்டிக்கு பேரு GIFT, குஜராத்தோட அந்த ஸ்பெஷல் எக்கனாமிக் ஜோனுக்கு பேரு கிஃப்ட் சிட்டி. Okay, Gujarat International Financial Tech, that's what is known as gift city. Okay, Gandhinagar, that is there. Okay, so when the finance minister read in the budget, it is a gift to Gujarat abinda they said. Okay, so what is IFSC? IFSC is a center where they can locate banks, stock exchanges, various financial NBFCs, financial institutions who are purely non-residents. Only non-residents. Okay, non-resident, including foreign companies, can buy and sell securities, which will include equity, debt derivative in foreign exchange, looks for stock exchange located in IFSC. Transactions not considered as transfer. I'm coming starting from section 47. Applicable for GDR, RDB, derivatives, other securities. Any transfer of the above by one non-resident on a recognized exchange in IFSC to another non-resident. How I say another non-resident? The consideration for which is payable in convertible foreign exchange is not considered as transfer and hence no capital gain. Okay, money comes into India, so no forex, no taxation. Similarly, they are exempted from CTT, STT, security transaction tax and commodity transaction tax. They need not pay. The units located in IFSC cannot pay. Okay, 111A, rate of taxation. 15% will be for STCG arising in foreign currency. இது எல்லாருக்குமே இதான சார், even though STT is not paid. Normally STT not paid, it is taxable at the normal rates, slab rates. Okay, for transaction carried out, even though STT is not paid. The exemption is available for listed shares, equity oriented funds, and business trust. Similarly, 115 JB is normally 15%, but for units located in IFSC, it is 9%. For units located in IFSC, 9%. So is 115 JC. If it is not a company but a firm, etc., it is not 18.5% AMT. 80LA and deduction. Income of unit located in IFSC is allowed a deduction of 100% for the first 10 years of operation. IFSC, purely IFSC. Questionable area இல்ல, but still I thought, ஏன்னா நிறைய இடத்துல சொல்லியிருக்காங்க, உங்களுக்கு ஒரே இடத்துல கன்சாலிடேட் பண்ணிட்டா பெட்டரா இருக்கும். Income of specified fund like financial institutional investor, foreign institutional investor, FII. Okay, the provision is applicable for a specified fund. Specified fund established or incorporated in India in the form of a trust or company or LLP body corporate, which has been granted registration as alternative investment fund. நம்ம investment fundல படிச்சிருப்போம். Okay, category 2, 3, category 4. It is located in an IFSC. All the units are held by non-resident other than units to be held by the sponsor, the one who is promoting the entity. Following incomes accruing or arising by a specified fund would be exempt to the extent such income is attributable to the non-resident. To the extent such income is attributable to the non-resident. Yesterday I told you, proportionately they will find it out. Income into divided by total assets that are held by non-resident. Income apportionable. Okay, so that is such income which is attributable to the units held by non-resident. Capital gain arising from transfer of bonds of an Indian company, GDR, rupee denominated bonds, derivatives, etc. Okay, the consideration should always be in foreign currency. Okay, any income from transfer of securities, okay, any income from securitization fund, okay, normally it is taxable in the hands of the ultimate beneficiary. But here, if it is a IFSC and all units are held by non-resident, not taxable. For the unit holder also, income accruing or arising from a specified fund is exempt. And also they have 10-15 exempts of income, interest income from units of a company located in IFSC. Very rare, but still IFSC is said in many places in the law. Just thought of consolidating for you. Please read through. I just want you to understand some definitions. Okay. We have been dealing with the royalty. What is royalty? Everything, transfer of any right, it's a royalty. Imparting of information, that is know-how, technical knowledge, everything royalty. Yeah, okay. Use of patent, invention, model. I allow you to use my trademark, that is royalty. Okay. Right to use any industrial, commercial, or scientific equipment, but not including. Okay. All these things are royalty. Even now, including consideration for sale or exhibition of cinematographic film. Okay, it's a royalty. What Amazon gets, what Netflix gets, the right to exhibit the film is also royalty. Okay, there is an interesting case law where Supreme Court gave further clarity. The issue is whether the amount paid by a resident Indian end user, நீங்கெல்லாம் மைக்ரோசாஃப்ட் வாங்குறீங்க, okay, or distributor of non-resident computer software manufacturers or suppliers as consideration for the use or resale of computer software through end user license agreement be considered as royalty. When you buy Microsoft 365, okay, I don't know, I'm very sure none of you bought, okay. Okay, right, நீங்க தாலியே வாங்குறது இல்ல, அதுக்கே கிராக் வெர்ஷன் வச்சிருக்கீங்க. So when you buy, are you liable to pay? End user, are you liable to pay tax? Are you liable to deduct tax at source? Is it royalty? Good. Adobe. When tax need not be deducted at source, Supreme Court said, software directly purchased by end user. You are not using it as a platform, but you are consuming it. Okay. Purchase of software with the intention to resell. Okay. That is, it is becoming a goods to you and not services. Purchase of software by a non-resident from another non-resident with an intention to resell, where software is integrated part of hard drive. Computer வாங்கும் போதே, when you are buying the computer itself, it comes with some software for which okay, for which you don't know. I'm not only saying about the OS is mandatory, but lot of softwares are included, inbuilt. Okay, I ask you to watch a film, Social Dilemma. அதுல சொல்லுவாங்க, in majority of the European countries, if you go and buy mobile phone, WhatsApp is inbuilt. You are not downloading. India, we are downloading if we want, but there it is inbuilt. It means that if you are buying a mobile phone, you are supposed to use WhatsApp. Okay, when they a mobile phone will be purchased along with a SIM there, okay, and automatically you are in WhatsApp as soon as you buy. The software is inbuilt. When you buy a lot of computers, now Microsoft 365 comes as a package for 1 year. Okay, right? Lot of software are inbuilt. Okay, your virus protections are all inbuilt. So, but are you supposed to deduct tax at source? No. Whenever it is integrated into a hard drive, you need not deduct tax at source. Okay. That's a recent case law. Please remember. Permanent establishment includes fixed place of business through which business of the enterprise is partially or wholly carried on. Fees for technical services means consideration paid, okay, for rendering any managerial, technical, or consultancy services. However, it does not include construction, assembly, mining, or like project undertaken by the recipient, which would be chargeable as salaries. Otherwise, it is taxable. If it is chargeable as salaries, if you are an employee and doing it, it will not be considered as FTS and head office expenditure. Okay, just the definition, miscellaneous, just a quick browse through except for that case law, otherwise not very important. So in this non-resident taxation, residential status, there can be a question. 115, you don't have an option but to mug up. When I say residential status, along with scope of total income. Okay, 115, you don't have an option but to mug up. Presumptive taxation, there might be a question, and definitions, rarely I haven't seen questions, but the case law becomes important. Am I clear to you? Okay. The next arena of questioning goes to DTAA, double taxation avoidance agreement. Okay, right. Let's take our class example itself. Venkatesh, okay, ROR, okay, Venkatesh, ROR, okay, earns income from outside India, earns income from outside India. The country of source will also tax him. Country of residence will also tax him. You all accept with me? India will also tax him. The country from which he earns also taxes him. So it results in double taxation. It results in double taxation of the same income. Double taxation of the same income. Both the source nation and the recipient and the residential state is taxing him. So worldwide countries started entering into double taxation avoidance agreement. It is unfair for my residents to pay tax in two countries. So worldwide, countries started entering into what is popularly known as treaties. Double taxation avoidance treaties are entered into. The first double taxation avoidance agreement is as old as 1930s. நீ ஏன்டா இந்தியாவில் நான் தான் இன்டர்நேஷனல் டாக்ஸேஷன் சொல்லிட்டேன்ல, நான் தான் உன்னை ராஜமௌலியா சொன்னேன்ல. Historical பேசுறோம், but at the time of Great Depression, probably Germany has entered into. அப்பவே நான் சொன்னேன் ஹிட்லர்ட்ட என்ன அப்படின்றான். Okay, right. Coming back. So, countries started entering into DTAA. Again, this type of agreements became very important for Europe. What did I say about the European Union? Yeah. What did they achieve? Free movement of goods, free movement of money, free movement of people. நெதர்லாண்ட்ஸ்ல நான் ஜெர்மனி போய் செட்டில் ஆகணும். I can go and settle. I need not get anybody's permission. One passport across the free movement of people. We all know about this GST law, which tells what is the point of taxation, which is the biggest discussion in GST. அங்கேயும் GST, point of taxation. Goods entering the country, goods sent from country, which is the point of taxation, is a discussion. Same income. I go and get all the income from a country where the taxes are less, because free movement. To avoid all these things, DTAA started becoming popular. India also started entering. Section 90. Bilateral relief. Bi means both the parties. Okay. Where there is an agreement. Where there is an agreement. What can the agreement say? Venkatesh earns income from outside India. And the country the tax பண்ணிட்டாங்க. Source country will always tax it. So what can this agreement say? அதான் relief தான் என்ன? Shall not be taxable in India. Okay. Income which is taxed outside India will not be taxed in India. இதுக்கு பேர் exempt method. The income which is already taxed outside India will not be again taxed in India. This is popularly known as exempt method, which is not very popular. Sharing other country to country. இப்போ if I say Venkatesh, the income earned outside India not taxable in India, it is exempt method. ஆனா நான் அப்படி சொன்னா I might have some problems. So what I should tell Venkatesh is the tax that is paid outside India can be claimed as a credit in India. Yeah. For example, every country will try to attract forex. Fees for technical services. What rate I am taxing? 10%. Whereas if the person is in America, it is taxable at 30%. If he is in Germany, he is taxable at 45%. So those countries will say, if I give him exemption, he is only paying 10%. Instead say, Raja, you do one thing, compute 30% less actual paid in the other country. This is popularly known as tax credit method. Okay, where I allow him to take credit of the tax paid outside India, by which I will get some revenue also. If that foreign country is taxing royalty at 15%, you are a resident assessee who is in that 30% bracket. Why should I miss that 30%, 15%? So I will say tax credit method. What our agreements do is, case to case they will study. In the country la idu jastiya, appo we will go for exempt method. அது வெங்கடேஷ் கிடையாது, கவர்மெண்ட் தான். Why? I am not, am I taxing the same income twice? You are supposed to pay 45%. Had you earned in India, you would have paid 30%. Since you are earning from Singapore, you are paying only 10%, that too to Singapore government. I am just telling you, நீ இதை இந்தியால earn பண்ணிருந்தா 30% கட்டிருப்ப, less TDS. So that's what I am also telling you. Where is the question? Had you earned in India some 10 lakhs and Shriram would have deducted tax at the rate of 10%, you would have shown an income of 9 lakhs. For an example, 9 lakhs now, some 1 lakh of tax. 1 lakh minus whatever has been deducted, the remaining you will pay. Correct? This apply. If foreign, no, you cannot. There I will prefer income exempt method. There the government will say income exempt method. It is assessee friendly. I am not taxing it twice. Pay 10% there, also 30% here. Totally 30%. That's all. That in that regard only assessee friendly. Yes. Deferring or sharing. சரி கொதிக்காத எப்படி ஏன் பாவம். That's why they are giving you customs duty exemption. That's why they are giving you 10 AA exemption. Export profit, to that extent they are giving you exemption. ராஜா ஒன்னு ஞாபகம் வச்சுக்கோ, எனக்கு ப்ராஃபிட் வரணும், நான் டாக்ஸ் கட்ட மாட்டேன் அப்படின்னா அதான் கவர்மெண்ட்டுக்கு ஹெல்ப் பண்ற எல்லா இடத்துலயும் some other benefit is given to you. Okay, okay, double taxation avoidance. So in the tax credit, okay, you are taking tax credit, right? Idathaan technically we call it as FTC, foreign tax credit. Foreign tax credit can be claimed for foreign tax credit means tax paid outside India can be claimed as a deduction from the Indian tax, total tax computed. Foreign tax credit means tax paid outside India. You paid penalty. You cannot claim. Yeah, FTC penalties you cannot claim. Only tax paid can be claimed. In which year you will claim that? Year of receiving, year of paying. Any other answer which is correct? Any other answer? அவ்வளவுதான்டா ராஜா. In the year in which you declare that income in India. In the year in which you are declaring the income in India. ஏன் அப்படின்றது I will make it clear to you. Every foreign law, every tax law will have this provision. Taxes paid or payable or taxes deductible either on due or on receipt, whichever is earlier. They would have passed an entry as on 31st December if they are following calendar year. According to our law, income accrues only in the next year, June. Their tax certificate will have a calendar year. My income will be in subsequent year. So the law is now clear. In the year in which you are declaring the income, take the foreign tax credit. If you are declaring the income by splitting up into multiple years, in the same proportion, take that tax credit also. Am I clear to you? Am I clear to you? இல்ல எவ்வளவு நாள் நீ டிக்ளேர் பண்ணாம இருக்க போற? Venkatesh earns income from outside India, and with that country, India does not have DTAA. Venkatesh earns income from outside India. He has paid the tax outside India for that because they would have given one day after deducting tax at source. Now he has to declare that income in India. India does not have DTAA with that other country. For what? FTC மாத்திரம்னா அப்போ 90 இல்லையா தானே? This is popularly known as unilateral relief. What is that other one known as? Bilateral. This is popularly known as unilateral relief. Just because you have not entered into an agreement, don't penalize me. அக்ரிமெண்ட் இப்போ இவ சொன்னா அப்ளிகேஷன் போடலாமா, போய் அக்ரிமெண்ட் போட்டு வாங்கயா? I cannot, because that is not within my hands. Just because agreement is not there, can I doubly pay the tax? NJA is a country with which I don't even know whether you have earned income or not. NJA நான் என்ன பண்ண சொல்றேன்றதை நீங்க புரிஞ்சுக்கணும். When you are paying to a person in NJA, here I am a recipient is an Indian. Huh? NJA, we tax them at normal rates, but at the same time, a lot of tolerance, etc., are not available. Okay, NJA is a different provision. Let's not confuse it with it. Here, unilateral relief. Okay, consider the income earned outside India in the total income. Compute tax. Provide relief. I'll tell you what is that. Provide relief under section 91. When you were all young, or 15 days back. I told you the difference between rebate and relief. Can you tell me? எப்போன்னு வேணாலும் சொன்னேன், ஏஓபி நடத்தும்போது. Yeah, thank you for recognizing me. But if a difference is only, yes, you told me. You seem to be a good teacher. அப்படின்லாம் வேணாம். சரி, பரவாயில்ல. அட்லீஸ்ட் ஏதோ ஞாபகம் வச்சிருக்கோம். If though 99% of that is wrong, but still, okay. Rebate is before surcharge and relief is after surcharge and அதுக்கும் இதுக்கும் சம்பந்தமே இல்லடா ராஜா. இல்ல, அதுக்கும் இதுக்கும் சம்பந்தமே இல்ல. ஓகே, ஓகே. Compute tax, provide relief. What is the relief? What is the relief? Okay. Rate of tax outside India, average tax in India. What is average tax? Do you remember? Total income divided by total, I'm sorry, total tax divided by total income into 100 as a percentage, whichever is less. Okay, whichever is less into doubly taxed income, whichever is less into doubly taxed income. You will show it as your income, claim relief. Even in the case of 90, you will show it as income, claim tax credit. Yeah, fluctuation gain, you will get the benefit also. 20% tax has been deducted. 20% on the date you are saying it as income, on that date, on that income, 20%. You will get the fluctuation gain or loss also as a relief. Bilateral means agreement exists with both the country. Unilateral refers to a situation where agreement does not exist. Just because agreement is not there, a resident assessee should not be penalized. So he should also be given the relief. Now, first, bilateral. Central government may enter into agreement with the government of any other country or specified territory. What is the difference between country and territory? Very good. Country is a republic, territory is under some other domination. Hong Kong, Tibet, territory no adala. Okay, right? Country means they got the republic. Okay, but that is just for your knowledge. For granting of relief, income on which income tax has been paid both in India and the other country or specified territory, income tax chargeable under this act and under the corresponding law in force in that act to promote economic. This is the reason for granting relief. Okay, idapati I'll speak on Saturday. Okay, this is the biggest problem of the world. Okay, I'll speak on Saturday about this. Treaty shopping. Yesterday I told you, patent, they park it in Ireland. Interest or investment, they park it in Cayman Islands or Mauritius. எந்த கண்ட்ரிக்கு பெனிஃபிட் அதிகமோ டிடிஏ படிச்சுட்டு அங்க they are going and starting companies, which is popularly known as treaty shopping. Okay, yeah, it's a wrong practice. We'll speak about it. அதுதான் இல்லைன்றாங்க லால. CBC, CBC, yeah, they'll find out there. Okay, exchange of information for prevention, etc. Okay, these are all the reasons for DTA. Generally, there are two modes of granting relief: exemption and tax credit. Under exemption method, the income becomes taxable in only one country. The other country gives exemption for such income. Under tax credit method, tax paid in one country shall be taken in the other country, that is the country of residence. Country of residence. Before progressing, I just want you to again understand it from the global perspective something. Can I be a resident of two countries? which country will tax? That means to say that two countries will levy on the same income two taxes. A resident assessee can claim exemption. யூனிலேட்ரலும் சரி பைலேட்ரலும் சரி. ஓகே, இப்போ பைலேட்ரல் படிக்கலாமே. Tax credit method. The tax paid in one country shall be taken as tax credit in the other country, that is the country of residence. If you are their side, you can take the tax credit in India because you are an ROR in India. Can you be a resident of two countries? In that case, which country you will take the relief? Huh? Okay. அதான் ஒன்னும் சொல்றான். You know, law has provision. Law director international law. If a person is a resident in two countries, then how will I determine the residential status of that person? Business connect. Where is his income from business, or where is his income from core activity arising? அதுதான் first part. Generally, business connect. Where are you doing your business? Are you understanding? Are you understanding? Where are you doing your business? Suppose in both India and Singapore I am doing business. Where are you staying for? Second one, yeah. Where are you staying for a longer time? That means the business concentration is more over there. Where are you staying for a longer time? You are staying equally. The third is a fantastic condition, emotional connect. Huh? Where is your family? Where is your family? Your spouse, children, parents. Where that is also unable to be determined. Right to both countries we will determine. On a case to case basis, we will say where you are resident. Business connect, stay connect, emotional connect. Otherwise, we will determine what's your connect. அவ்வளவுதான் நாங்களா டிட்டர்மைன் பண்றோம். Law has this international law. Okay. Now, unilateral relief. Assessee is a resident Indian. Income should have accrued from outside India, from a country with which India does not have DTAA. Okay. If the above is satisfied, average tax on doubly taxed income or tax paid outside India, take the minimal and provide the relief. Read through. Repatriation is never an income. They tax here also. Yeah. India. You cannot, because UAE doesn't have tax. Income exempt பாங்க. ஆமா. They will say income exempt method. Not the entire 30%. Yeah, for the income earned, pay the tax. Please read through. The most important thing in law nowadays is what is known as a tax residency certificate. The income will be taxable in both the countries. அதுக்கு தான் answer. ஆமா, it's a question. Now, friends, should non-residents have PAN? Refresh button press பண்ணிக்கோ. No. முன்னாடி தான் அது yes. No, they need not have PAN. இப்ப எப்படி கிரெடிட் கொடுப்ப? இந்தியால he has earned income. பாஸ்போர்ட்டா ஆளுக்கு 5 வச்சிருக்காளா? You are understanding the problem, right? I need to give tax credit to that person. Huh? That is what is my question. How to give him? That in international taxation, this is known as tax residency certificate. I ask him first, because to avoid this confusion, which I told just now, I ask him first, tell me which is your tax paying country. Tell me the country in which you are resident. Because I need to provide information to that country saying that in India, somebody has paid money to him and tax has been deducted at source. So I will ask him, provide me your TRC. நீங்க 15 CB இன்னைக்கு TRC இல்லாம போடவே கூடாது technically. Tax residency certificate. For assessees, either DTAA or provision of law, whichever is beneficial shall prevail. The beneficial construction is predominantly to resident assessee. Where tax credit needs to be claimed, assessee has to provide foreign tax credit. What is that foreign tax credit? Proof of tax paid outside India. That is what is foreign tax credit means. FTC will be provided only for tax surcharges. It is not available for interest and penalty. Interest and penalty is for late payment of tax. Why should I give for that? FTC will be provided in the year in which income is offered to tax in India. In the year in which income is offered to tax. If the Indian law permits income to be offered in various years, then FTC will be proportionate. FTC will not be allowed if the tax paid outside India is disputed. If you remember, in your assessment, I taught you 248. Should tax be paid? Where you are disputing the tax need not be deducted at source. Deduct the tax, pay it, and then go for a dispute. Wishcraft International, Maruti Suzuki. I am disputing tax is not liable to be deducted and paid. But I cannot go for an appeal unless I paid, unless I deduct the, unless I pay the tax. And in the appeal I win. Who will get the refund? Whoever has borne it. இதே தான் அந்த கண்ட்ரிலையும் when the tax is disputed நான் பாட்டு இங்க relief கொடுத்துட்டேன். There you won and got the money back, then my relief becomes meaningless. So where it is disputed, hold it back. However, later in the year in which judgment is provided, the judgment against the assessee holding tax as correct, then FTC can be claimed in that year for the relevant previous year where income is off. Am I clear to you? Okay. Don't worry about it. Enjoy. Nandita, a resident individual, retired employee of Prachar Bharati, aged 60 years, is a well-known dramatist deriving income of 1,10,000 from theatrical works performed outside India. Tax of 11,000 was deducted in that country where the plays are performed. India does not have DTAA with that country. Her income from India amounted to 510. She invested 150 in PPF and 32 in LIC pension fund. Okay, totally 150 only allowed. She also contributed 28,000 to CGHS during the previous year and gave payment of medical insurance premium of 26,000 to insure her father, a non-resident aged 84 years, who is not dependent on her. Compute the tax liability of Nandita for your assessment here. Read through. 1 minute. Look, tax இருந்தது. TDS இல்லைனாலும் tax ஒன்று இருந்தது. Yeah, there was not a single currency. வரேன் கண்ணு. income earned in India நான் கொஞ்சம் சேஞ்ச் பண்ணிக்கிறேன் because இந்த question வரும்போது the 5 lakh the rebate 12,500 கிடையாது. So now it will fall under rebate. So I will change that to 8 lakh 10,000. Please, I'll change this to 8 lakh 10,000. Per policy 50 per. Yeah, 50. He is asking why I am only claiming 25,000 when 26,000 is available. That's the question, right? Yeah, that's why I also stopped here. Had they been residents, 50,000 I would have claimed. Look at the question. Parents are non-residents. Okay, that's why. That's why I waited for somebody to ask me this question. This 50,000 is only for resident senior citizen. Resident, and the 2,50,000 resident senior citizen, resident super senior citizen. If they are non-resident, only the base limits are applicable. Take a minute and understand first how I am computing tax. This part, do you understand? 55, okay. Now, less relief under section 91 because agreement is not there, relief under section 91. Rate of tax outside India. How much is that? 11,000. What is the income earned there? 1 lakh. Okay. 11,000 divided by 1 lakh 10,000 as a percentage. 10%. Rate of tax outside India. Average tax. Total tax divided by total income into 100. Total tax divided by total income into 100 to convert it into percentage. Okay, maybe it should be 7.75. Okay, whichever is less into doubly taxed income. 1,10,000 into 7.75%. 1,10,000, okay, into 7.75%, okay, tax payable after relief. So I am not giving the tax credit for entire 11,000 paid there. I am only giving for 8,520. Is doubly taxed. No, average tax would have been less. Zero. Am I clear to you? Go ahead, write down in a fashion you will understand. Are you clear? Okay. Madan provides you the following particulars of the income. Compute is tax liability. Income from profession, interest from savings bank, dividend. Income earned from country A, tax rate 15%. Royalty income from patents which is registered, expenses on earning such royalty income. Income earned from country B, rental income from house property. Yes, it is same style of computation. No, unless they say that it is developed in India, it is registered in a foreign country. Dana. Is this clear? Is this clear? Vaguely, you remember this? 80 RRB for royalty, 3 lakhs you can claim deduction. అది 80 QQB. ఇది patents தானே? 10,000. Senior citizenக்கு FB கிடையாது. Any interest, FD, RD. Allow me to explain computation of tax, then you can take down. Allow me to explain computation of tax. Base tax, take the remote, you can reduce the temperature. Is this clear? Okay. So because income exceeds 50 lakhs, not 1 crore, 10% surcharge. Section 91 relief from country A. Tax rate outside in country A. How much is that? 15. Average tax. Total tax divided by total income into 100. Total tax divided by total income into 100. Whichever is less. On doubly taxed income, the relief. What is doubly taxed income? What is doubly taxed income? How much is that? 9 lakhs minus 9 lakhs minus 1 lakh minus 3 lakhs. அதுதான் doubly taxed. Not 9 lakhs. I did not tax the entire 9 lakhs. Okay. That is 9 lakhs minus 1 lakh where I gave the expenditure minus 3 lakhs where I gave a provision into 15%. So 5 lakhs into 15%. Are you clear? Are you clear? Okay. From country B. Have they given the average tax rate? 28. Here I know it is 31.44. I have the answer already. So whichever is less, 28. Okay. What is the doubly taxed income? What is the doubly taxed income? 8 lakh, 12 lakh minus 30%. So what is the doubly taxed income? 8 lakh 40,000 into 28%. Only on the doubly taxed income you can levy this, not on the income received. Even though they are directing tax on the income received, but I will provide relief only on the doubly taxed. Yes, friend. Hmm? Yeah. What's it? That is your that there you can tax plan. Yeah. Kalpesh Kumar, a resident individual, musician, deriving income of 750 from concerts outside India. Tax of 1 lakh was deducted at source in the country where concerts were performed. India does not have DTAA. His income in India amounted to 30 lakhs. Compute the tax liability of Kalpesh Kumar, assuming 150 80C medical insurance premium in respect of his parents, 50,000 you can claim. Assume he has not opted for 115 BAC. Less than 5 minutes, please. Huh? And the deductions, relief. Nobody has ever questioned. Beneficial. Yeah, because you will be a loser. You will be a loser. அப்படிதான் என்னால சொல்ல முடியும். Assessee will be a gaining by this method. For example, cases where India income is zero, where there is DTAA with a country in respect of taxability of a transaction, can a taxpayer choose to be governed by the normal provision of income tax? Can the department insist that the provision of DTAA should only be applied? No. Whichever is more beneficial. Whichever is more beneficial to the assessee, they can choose that. Department cannot insist, okay, assessee friendly provision, DTAA or normal provisions, whichever is more beneficial. Under the provisions of income tax, what is meant by FTC? I have given you answer. To whom FTC allowed and in which year? To whom means one who has income from outside India, from a country with which India does not have DTAA, they can avail, or even where foreign credit can be claimed. In which year? In the year in which income is offered. Income is multiply offered, it should be proportionately taken. We have the answer there itself in the material itself. Niranjana, aged 61, resident, has derived from country X with which India does not have DTAA. The broad details of the income are business income, income from country X from business, gross rent from let out, insurance premium paid. In country X, the rate of tax is 10%. Income from house property is not taxed in country X. Compute the total income and the taxpayer. Let's do it. Before that, the question paper, the DTAA question yesterday, I was telling you that Brazil gross salary in India, professional income received in country Brazil, dividend income, rent from house property located in Brazil, interest income on FDR with Bank of Baroda, senior citizen, aged 62. So 50,000 கொடுப்பேன் 80 TTB. Paid interest on housing loan to Punjab National Bank, Pune branch for the residential property to 150 deduction, 80C. Investment in PPF, medical insurance. Assume tax in rate is a country, Brazil is 16%. Compute the income and tax liability assuming he has opted for 115 BAC. All the more 80C, 80D எதுவும் கிடையாது. To? You cannot, the interest இல்லையே, principal. Interest, yeah. On self-occupied property, you cannot claim it. On self-occupied property, BAC. He should not opt for BAC. At least tax plan பண்ணுனா சொல்லிருக்கலாம். அவனே அசியூம் கொடுத்துட்டா, நீ அதுக்கு மேல நீ என்ன அசியூம் பண்றது? நான் அசியூம் பண்ணுவேன்யா. 6 marks question. 6 marks question, remember. By this I have answered all the questions except equalization level. $80JJAA வரும், $80M வரும். M வந்து கம்பெனிஸ்க்கு தான், BACல அது எப்படியும் your resident assessee, yeah, there is no restriction as such. Remember, அப்படின்னா நம்ம ரிலீஃபும் 50% தான் கிளைம் பண்ண முடியும். ஏன்னா income taxable becomes doubly taxable income becomes 50% only. You received 5 lakhs from your client outside India, you would have offered income of only 250. So foreign tax credit or 50,000 இருந்ததுன்னா you can only claim 25,000. 80 also category 44 ADA cases. MD தான் வித் இந்தியா. ஆமாப்பா சிம்பிள் கொஸ்டின் பா. எதுடா கஷ்டமா இருந்தது டாக்ஸ்ல? அசஸ்மெண்ட் ஆஃப் ஃபர்ம்ஸா கம்பெனிஸ்? ஆமா நிறைய பார்ட்ஸ் இருந்தது. I told you how to remember 115 JB, 115 BAB. மிச்சப்படி அது PGBP தானே. ப்ரிப்பேர் பண்ணவனை தவிர ப்ரிப்பேர் பண்ணது ஒரு 4-5 பேரா இருந்தா அவங்க கூட கிடையாது. நான் ஒருத்தன் தான் இன்ஸ்டியூட் மெட்டீரியல்ல ஃபுல்லா படிச்சிருக்கேன். நான் சிஏ ஸ்டூடெண்டா இருந்தப்போ என் இன்ஸ்டியூட் மெட்டீரியல் புதுசா இருக்கும். ஃபவுண்டேஷன் மெட்டீரியலே வீட்டுல சும்மா இருக்கு. என் ஃப்ரெண்டு ஒருத்தர் நம்ம ஸ்டூடெண்ட் ஒருத்தி சொல்லுவாங்க, சார் எங்க அப்பா திட்டுறா சார் பாஸ் பண்ணதுக்கு அப்புறம், இதெல்லாம் படிக்காம எப்படி பாஸ் பண்ண? காயத்ரி நீங்க தான் ஆர்டிகல்ஸ் பண்ண, இப்போ ஐஏஎஸ் படிச்சிருக்காங்க. அவ வந்து அவ சிஏ ஃபைனல் ஃபர்ஸ்ட் அட்டெம்ப்ட் எல்லாமே. அவங்க அப்பா அவரை திட்டுறா, எனக்கு என்னமோ இது என்ன நீ இதெல்லாம் படிக்கவே இல்லை பாஸ் பண்ற இன்ஸ்டியூட் புக் எல்லாம் புதுசா இருக்கு நீ எப்படி பாஸ் பண்ற because a house property is not taxable in that country. They would not have deducted tax. Correct, Sudha. Putting some responsibility on you. Try out the other 2, 3 questions you have. I mean, some 6, 7 questions are there. Try out whatever possible tonight. Okay, wherever you are getting stuck, I will clarify that. Okay, rest of the international taxation, we will do it tomorrow. Small areas, but we know that next questionable area and the either 555 is advanced ruling, full of amendments. Okay, so sure 5 marks question. Only 245 W தான் இது questionable area. அது சொல்றேன் எதனால எது amendment அப்படின்னு. Okay, so meet you tomorrow to complete the major part of international taxation. All the best, friends.